Okay, sorry for so much cluttering, and I hope everyone's still in focus and we've not lost anyone's focus. Now, right, we're interested in this 4C here. With the internals, 15 minutes. If we cannot break above 42,700, very important level, it would mean that this is going to extend lower. The most prominent cycle top is this internal degree one here, 57,000, 58,000. At that point, the market is simply doing actually double inverted heads and would still revert higher to do a right, would still get back into that Elliott channel, and we're moving higher again to $73,000. So there could be a number of fundamental reasons behind this, all right, but it's anyone's guess. That's not the important point. The important point is how we would be prepared for this, how we would actually accommodate such a move. We would accommodate such a move by going out of longs at 62,000 now, okay, because of the current cycle that we have on momentum here on the 4-hour chart. So we go out of longs that we just checked. We could go out of longs actually as high. If we do another B, it's going to be 64,500 and 65,500. Depends on what we see on the 15-minute chart. If we find rejection at 62,700 on the 15-minute chart, you want to go out of these longs at 62,500 right away, because we're going to get a C down to 58,000. If you are unable to get of these longs, out of these longs, okay, we understand now that we have to implement our level management. Level management was dictating that, this is it here on the 4-hour chart, we were gonna buy at 52,500, 53,700, half size at, okay, we're already long here at 62,500. So we add at 53,700. Instead of adding at 53,700, we would consider to add at this cycle top one, 56,800, okay, 58,000, 57,000. We could add on with confirmation, maybe by 59,000, add that second half with a stop below the local market low made on the 5 and 15-minute chart. We would be implementing this same risk matrix. We would have already bought 62,500 instead of 53,700 addition. We would make an addition maybe at 59,500. all right, we would have a stop on that 59,500 just below the market low that was recorded at that time on the 15-minute chart. We would add, of course, and by then a momentum confirmation, an internal degree 3 or degree 1. We take this again to 73,000. We're just actually implementing these yellow arrows here as shown, all right, but at different levels. That's all there is to it. It's still good and it works, and we have always to be involved in the market at 62,500. Look at it on the more pragmatic side. The market could attempt to do 58,000, may not get there. Suddenly some fundamental driver kicks in, takes off at 60,000 or 61,000 all the way to 69 and 70 and 73. So you may not actually want to liquidate that 62,500 position that we're holding. Not everything is just technical. There are other, of course, doesn't always have to be playing out in a technical setup or manner. Alright, so we now understand the full picture, the full technical picture. Okay, we act accordingly. Alright, I think everything is really clear. We're bouncing, we expect this is it, we're bouncing at 1 and we're off, but just in case we're not bouncing at 1, we just check that 4-hour chart. If we're bouncing at 1, we're gonna have a degree B, that's it. A degree B, we're not gonna do 5 right now, and we just did this, we want to take profits for 62,500 at 65,500 or 65,000 at the most. Why is this? Because of what we're seeing here on the 1-hour chart. We have that here. If you're just holding that either 0.15 of a coin or 0.075 of a coin at 62,500, you could actually hold that with a stop here at 58,000 below the head and shoulders if you just want to be a swing trader, intra-week swing trader without doing any level analysis. So we're looking here at just holding that 0.15 of a coin or 0.075 of a coin at 62,500. The stop is just 58,000. We take it to 73,000. This time, because of what we're seeing on the current 4-hour momentum picture, if we're holding 0.075 of a coin, half of this size at 62,500, we're gonna add at 58, or have a stop at 58 if you don't want any complications, but we'll consider seriously to add at 58. There's really no problem. And 57. Anyway, probably the market will not even go to 57. This will be respected as inverted head and shoulders. If that is the case, it will show that we have taken out that level at 62,700, and actually we would take profits at 65,500, because the market is going to do a lower head equating with this head before doing another 4C down. It is still consolidating. This is what the market wants to say, consolidating these levels just below 70,000, so that by the time it does take out 70,000, it's a strong move higher.